Hey, good people. Yes, how are you? It's the Market Sniper coming at you. We're going to talk precious metals today. Yes, we're going to revisit what we've said about Palladium and how it was due to underperform as the precious metal dog of the precious metal category. That's right. There is dogs in even good groups, and why it's a dog. And previously it shone really bright as well. So none of them are dogs forever. We'll also be talking about why gold is looking relatively impressive today. A bit of data numbers came in today, so it kind of stopped a little bit of a float up. We've seen the gold-silver ratio do a clear turn to the downside because silver is now stepping on up. We're also going to answer the big question you've been wanting to know with Mr. Dimon, Jamie Dimon of JPM, selling off $141 million worth of stock. A minor little petty cashed, a little distribution, one might say. Yes, he's distributing a little bit of light selling on JP Morgan. Should you prefer to own JP Morgan, the bank, or gold? And that is going to be discussed technically, not fundamentally, but technically. We're going to look at the chart between the two. But let's get straight on it. So first of all, Palladium. So a long time ago, we said you can go long platinum, short Palladium. Some people have misinterpreted that with recent tweets. So let's just go to the screens and show you the screens. Here we go. So the macro short precious metal. That means one metal that was on a big time frame short. That's right. Although we don't like being short a precious metal generally, and we suggested being long a different one simultaneously, and we suggested platinum. Platinum long, Palladium short. So that gives you a neutral position. You can go $100,000 short on Palladium and $100,000 long on platinum. And if the whole lot goes up, you will make back on platinum, usually at least, what you were losing in Palladium. And in a similar way, when you do such a thing, you could have also gone long gold, for example, and short Palladium by a similar amount. So all that means is you are saying this is relatively the weakest one in the category. So going back to this tweet, what a difference 2 weeks makes. Because we have mentioned that we are bullish and that there is a break of the 2000 mark was done, and the pullback that we expect will be far smaller, and that there will be a major move through this. We are mentioning that that is bullish gold. That is a gold. That was one of the precious metal categories. It is not we are bearish 2 weeks later all precious metals. We are bearish Palladium. We are long the rest. We are biased long to the rest. We aren't trading long. We're investment long at the moment, both gold and silver and platinum. And we have been trading short Palladium with a similar trading long of platinum. So you can be inside of a category, seeing one component of that category trading weaker. So let's just deal with that, because some people were misunderstanding. They were saying we were bullish and then 2 weeks later we are super bearish. No. It's specific in the market. So we'll do a little bit of a look at that. But before we do that, what should we have a look at? Well, let's have a look at gold. Start off with the big boss, the God market. So that is that 2K run and that pullback. We don't assess that you're going to get the same scale of pullback that you had previously. There to there. That was with your 2000, your last proper 2000 run. That's the dark blue line over there. You had a little bit of iceberging above the 2000 mark for that period there. Tiny wick there, initial rejection, pullback, then the push above, and then back down. So remember, the central banking cartel that elect to have as a central policy inflation, where they create money for themselves to live off you, and you keep working to make money, but that money, instead of, with all that demand, instead of going up in value, surprisingly keeps going down in buying power value, because the pyramid above you is perpetually proliferating it to keep you permanently toiling for them and ever working, chasing, catching up with their confetti while they create it out of nothing. That's right. Call it an exorbitant privilege. I think that's an understatement. Anyway, without getting too deep into those weeds, we had a short pop above the 2K mark there and there. This is the 1960, by the way. That's a different level that may have been a key level of significance that we are still watching and observing. So don't confuse the two blue lines. The 2K is the dark blue one. In fact, I'll make it fatter. So that was quite a substantial pullback, 2080, and then you were down at 1810 on gold. Then you broke this channel. We've covered this before, small pullback, and you pressed on high. So our statement stands that we are testing the 2K mark. We are winding up for a sustained break. The next time you break with real momentum. Now, there's a couple of steps in that process. People get frustrated because they just think it's just going to be straight line up for a while. What tends to happen with a key level of significance is it serves as an electric fence for a while, so you get buzzed away, but you haven't gone as far. What might happen is you could even still go down and make a lower low, but that you turn a lot sooner than the previous time, and you start to wind up again, and you keep coming back to the level. And you keep coming back to the level, and then at some point you break after either, for example, doing a winding up structure like that, and when you break that, you may even revisit it one more time, but this time from above, behind, and this time it serves as support, and then you crack on higher. And then you begin that journey potentially to the 3,000 mark. And this is on a forever printing game that is now in its parabolic phase. Of course, you realize that money is being proliferated by your overarching world leaders, overlords, and this is where you find yourself wanting gold to win. And they, of course, don't want it necessarily to highlight their proliferation and their policies. So it's often held back a little bit, but in the end, truth typically outs because more and more people realize that debt is no longer good. Okay, so let's go into the lower time frames. We did get some data in today, so we were doing rather well up to here, and then the data came in, and the data is going to be used for pulling you back. So what are we today? We are in fact Wednesday, November the 15th, and here's what you got told. Of course, how much you should believe the data. In fact, the banks want you to believe it and will probably move the market in accordance with that belief. It depends how much you trust the Bureau of Labor and Statistics and all of the other collection agencies for data. But production, purchasing, so the producer purchasing index, my apologies, month on month, which was meant to go up, that's inflationary, actually was down. So that is bearish for inflation. We are winning the war on inflation, they want you to believe. Core retail sales, which is obviously the strength of and the confidence of the consumer, they wanted you to believe was going to go down, and in actual fact it's showing how strong our incredible labor market and policies. This is very in accordance with the lies. Hey, the retail consumer is much stronger than you're thinking. Of course, they manage those expectations super down to make a 0.1 look super good. So that shows, retail consumer strong, inflation dying. Hey, everything is hunky-dory. Empire State Manufacturing Index, don't even ask me how they put that, but how much it'll basically measure how much manufacturing is actually taking place, which if high points to a growing and strong economy. 9.1 beats a minus 3.3. So don't forget, the investment banking cartel are the ones that set this forecast and the consensus for the bar to then be jumped by the actual number to show how awesome everything is. It's even better than we expected. So at the moment, we've got production price inflation lower than expected. Hey, inflation's dead. You got retail sales stronger than expected. Hey, the economy's strong, the consumer's strong. And the manufacturing index, which is of course the commercial side and optimism for building and developing inventory, is also strong. So everybody's building stuff to be bought and everybody's buying that stuff, and inflation's going down. Isn't that great? PPI month on month, so that is again an inflationary. Those go kind of together, the core PPI and the PPI. Again, like this number, below expectations. Expected 0.1 came in minus 0.5. Hey, we've won the battle against inflation. Woohoo! Retail sales, again, only minus 0.1 month on month, versus an expectation of minus 0.3. That is a reduction. It's a reduction in retail sales over the previous month. However, because they expected it, The banks expected it to be far worse. The consumer is stronger than expectations. Of course, Thursday we'll have unemployment claims. And if we're to continue this trend of just A stars everywhere you see, everything better than everybody thinks, you're probably going to get unemployment claims number in here tomorrow, round about the same time. That'll be November the 16th. That's right, sub 221. So that'll be a green number. And hey, everybody's working, everybody's happy, everybody is buying, and it's getting cheaper than we expect, and the manufacturers are bullish, etc., etc. So that's the very consistent narrative of what's going on there. So what that actually says is soft landing, super soft landing narrative, no worries here, and interest rates and inflation all over, the problem is being won. The problems being one. So you can expect from the no need to up rates anymore, the problems being one, that there would be a little bit of a pushback on things like gold, because gold is actually an inflation check. If we keep having to increase rates because money is devaluing, it's more likely that eventually gold will start to go up. Anyway, so that was the news, and that put a slight stop on gold's move up for the day. That's where we were. That's this wick that you're seeing back down here. You could see that this was, in fact, losing some momentum. Some do ascending head and shoulders like this. We don't. But there was clearly a grind line along the line there, and it broke. It wouldn't have made a target. It reversed down here, and it already started coming up. So that's showing, but for small reactions, once you hit the 2000 mark and just before, you ended up taking a reasonable rest, but not particularly deep, and now you're ready to go again. Now you are ready to go again. And here we go, slight slide, broadening structure. We would expect that to have this line broken to the upside. In other words, for us, that is almost a megaphone of continuation on a bull pole, which shakes its head about, lets a little bit of volatility in the system, lets a little bit of the heebie-jeebies go, a little bit of the nervous guys jump out, and then carries on up. So that's pretty bullish for gold. And what also happened that was pretty bullish was, in fact, the gold-silver ratio. So we'll pivot on merrily to the gold-silver ratio. This one is a little bit more drawn up. We're on a lower time frame here. But what you will see is that was ascending and ascending and ascending and making marginally higher highs here, and eventually ran out of puff. And the falling wedge has broken. Also made a marginally higher high relative to that, and that. So that was pretty much getting punched out a little bit in terms of going higher. Remember, we want this down. So this move was very welcome, a break of the rising wedge and a sell-off quite abruptly. And we want it to come right down until it starts approaching this slowly ascending, basing ascending grind line, which eventually we suspect that it will break to the downside and run down to the 65 level, which is our neckline for our head and shoulders, which we've covered in other videos, and that can run then subsequently all the way down to the 32 and potentially even post that to single digits, depending on where we are and what the dollar is and the reset, and whether it's still legal for guys like you and me to own bullion, and whether you've had to register it with an NFT and token that allows others to buy it at a market determined rate. We'll watch and see how those things develop later. So maybe keep some of your metals dark if there's a registration process that comes around. It's not me advising you ever to do anything illegal. Always comply with all the laws, because your government knows best. Okay, yep, there you got it in a nutshell. So how's silver doing then in terms of all that? Pretty damn well. We did highlight there was some flagging, and it actually got a slight bear flag within the bull flag. So let's just explain that. You get fractalization. So on lower time frames, initially you can sometimes get, when you're having a pullback, a deeper pullback first, and you set up some structure, that exhaustion and rip there set up a bear, and that just gave you a little dip out of the larger pattern structure. We get that a lot more, and we talk about it a lot more in things like wedges where there's been squeezing. So whenever you get a constriction in the volatility, you have that trapped energy. Think of the ping pong ball under the bat on the table. When you just trap it, the ball down, there's that energy. When you're squeezing, you tend to get that. That's why you get a little pop out the wrong way before it goes strongly in the direction you more typically expect. And then sometimes it can happen in a flagging event. There's less compression, so you're not getting the squeeze so much, but you had a little dip out here from here during this period, and that could have been associated with a tiny bit of dollar strength that just came out on news and whatever, and you had a dip out the bottom. You jump back into the flag over here, and you then rest it again. You can see these little portals of rest just on the key levels, exactly on the flag. Of course, we split our flags through the middle. You can see the faint gray line over there, and you have now broken that flag to the upside. So that is a bull flag that has triggered with a small dip check out the base before going the other way. And this is the great warning we give you with technical analysis. Often, just before the major move, it goes one way before going the other. So it flushes out. There's a flushing effect, and then the weekends get shaken, and then it goes and does exactly what it wants. And if you're sitting in there and you don't understand stop placement, you're oversized and you can't take much of a loss, and it moves against you, you end up watching the move doing exactly what you thought it was going to do, only you're not in it and you got given a loss. So, and I mean, there's even another price example right here where you were sitting here. Now, if you knew inverted HVFs, we were expecting this to have a sell-off, but first it went up and then it got rejected quite strongly, and then down, down, down. There's an example in the opposite direction before the squeezy got you going on your bull pole that is now well in place, and that might now be on the way to going further. So let's see, where does that pole go to? So I'm going to say goodbye to that beautiful Picasso that I created right there. You can buy it for $50 million as an NFT, yeah, you know, do your money laundering or whatever it is you do. This is the 24.8 is the implied target now from the low end of the base. So I'm actually going to take it from that spill out the bottom to keep it slightly more conservative, and I'll just extend the pattern slightly here, although that flag is now considered a triggered event over there with a dip out the wrong way, little flush out. Beware those things, and be aware. So that's already pointing to about a 24.8, but after that data, a little bit of a shooting star, pull back, pull back, pull back. So we actually want to see bit of dollar weakness for this to continue to assert to the upside for precious metals, and it's possible, but that's a little bit of a shooting star. It wouldn't shock me to see us come back down and bounce on the roof here a little bit, and maybe even go a bit below it and mess around. Wouldn't shock me, and it could go a bit lower. It could even return into the structure before going. So sometimes you go from one end, you smash it to the other end, you clear the other fence, and then you come right the way back. So it's possible. Key round numbers, obviously 23 are significant, so you could trade just below 23 as part and parcel of any possible pullback, or it might get shaken off quite quickly. We don't know. We'll see tomorrow, but more medium term, the 24.8 would look like a great performance for the silver on a bull flag that got tested to the downside before eventually breaking on in the other direction. So yeah, reasonably positive all around over there. We have also before done cross valuations. I'm going to be coming back to that JP Morgan share selling Jamie Dimon in a second. But we've also said to you on the great technology of everything Amazon era that if you had divided Amazon by silver, if you had traded gold and silver, you actually should have been out of silver during this entire period. You literally had the key tech stoink of the moment, the New World Order one retailer, probably bottomless overdraft courtesy of the Rockefeller and BlackRock and every other Zio foundation, that allowed him to continue to develop without ever having caring for a profit, just to build. And this gave eventually a head and shoulders, but you should have been out of metals during this period. It's a sad fact. Yeah, you know, not all the time. Technically, the minute this broke and it started to run, look, you actually broke even earlier, but you were chopping around a little bit, but the dominance started here, and you would have been far better being in an Amazon stock. You have to say it. If you can't say it, then you don't see the facts. That doesn't mean I'm an amazing fan of everything that company does and who stands for it and who's behind it and all of everything else. I'm just saying it overperformed relative to silver. You have to look at that and say it. Now, one of the things we said is more recently, you've got this element of a potential head and shoulders. a head and shoulders. Now this is rallying quite strongly after making our target, by the way, of the HVF. This was all chop beyond the target. So this setup we called was a short from around here. This says you should not be in Amazon, you should rather be in silver. And what's actually happened is you've got this rally up to here, and we get to be wrong. That's right, there's always a level that you get to be wrong when that alert is run that I've just put on, although it seems to not like it. No, it put it on in the end. And however, we get to be right down here on a head and shoulder target if that reverses and gold and silver start outperforming the Amazon stock. So there is a reversal potential that's in there in the light blue head and shoulders. We've done this on a month. We can take it to a weekly basis. You'll see it more clearly. And let's buy more time in real estate here. We've done this share before with you. There is a head and shoulder there, only invalidated on the run of the shoulder. But an equity rally right now, which has also been supportive of tech, which has seen this travel to the upside. So we will see if that reasserts to the downside. Often you get these after running a key level of significant counter trend rally. The key thing is, will it be a higher high or not? And if this turns down, that game stays on. It stays on. What about that JP Morgan? Okay, so JP Morgan divided by gold. So we're talking about the man who actually said and owned very little of JP Morgan. It was just under his name. But the man who said gold is money, all else is currency. Yes, and that's what he's alleged to have said. Whether that's true or not, we don't know. So that is JP Morgan stock divided by gold. And this is quite a lengthy period. So you can see gold was an underperforming asset. If we get a little bit more history, not sure it's going to give it to me. Gold was an underperforming asset for an extended period until we got the run on the banks. So the banks got hit down. Gold actually did relatively well going into 2011. And this is showing JP Morgan quite unattractively as an ownership proposition. So near the bottom, unattractive JP Morgan. Higher up, attractive banking over. So the financial leverage of everything, by the way, that would have gone even higher above all the way through the 2000s when everything was borrowing, and gold was right down at $250 in 2000. So this chart has come a long way down, getting to these lows. This is now a bounce rally in what is an established bear trend since the dot-com boom, the 1990s, late 90s into 2000. So this is now JP Morgan is the ownership proposition you should have, all the way up to roughly 0.1, which is quite interesting that we get a round number out of all of this. And then we seem to get sold off. There seem to be little knockbacks that say, hold on, gold is better. And this is a log scale, by the way. So that's 0.05 to 0.1. These might look small moves. It is a 0.1 to 0.05 is a doubling in the relative value of gold to JP Morgan shares. So even this sell-off from here, from that top high, is a substantial 2x in any trade that's put on. Then it rallies back up, but again, we can't seem to get beyond the 0.1, and now we are bunching up in the most interesting way along what we consider HVF method, basing ascending grind line, done in red because that's the level I'm expecting to be broken, not the 0.1 level. So what'll that tell you? That'll tell you, in my worldview, banking stocks, particularly we're discussing JP Morgan right now, but I don't think you're going to get much different with all the others, are going to underperform gold overall. And at some point soon, and I would look for a rally here up to here and then a down, and I think then we go, you could indeed have a significant, and by the time it's done, I would expect all previous lows to be run. If you think 2009, the depths of the low of the crisis when nobody wanted banks was bad, wait until you see the global synchronized leper colony of all over leveraged governments, because they're controlled by the same group of people, all fail simultaneously to try avoid any one nation getting more into trouble, along with so much geopolitical chaos and FUD being thrown in the air to distract you. that you will in fact see banking shares not be worth very much at all. And physically owning and holding gold could be a very useful thing. So I would expect those lows potentially to be run. I would expect that to break. Yes, you can get a return move all the way to the bagel, but then you trade down. So that is the answer, technically, not fundamentally, technically, as to whether you should be an accumulator of a bank share, marginally higher highs, grinding along the lows, or gold. And the conclusion I come to technically is that line is the one that breaks, not this one. If you agree, hit the like button, and there's a pure gold link right there for you to go and buy precious metals with awesome guys, the people I buy from at the same price I buy. Or even better, book a call and you can trade this with us, helping build wealth during reset season. First link in the description. Book a call, chat to someone just like you, not a salesperson, someone just like you as a member of our community who will tell you and show you what we got. We've got a great new app coming and a great new desktop upgrade and update, which is going to look absolutely superb, to be even faster than usual. And of course the daily updates from myself, from community members that have been with us for an extended period, who are masters of HVF method in webinars for the US session, global sessions, crypto, buy markets, different segments depending on where you're interested, precious metals guys, as I've already mentioned, crypto guys, FX guys, who cater for all. We are watching the grand macro of a financial reset go into play in terms of calling. You get to hear things before anyone else. 3 years ago we said debt is over. The rest are catching up in the last 6 months, maybe a year, that maybe we turned the corner on a 40-year bull market of debt. Wow. Okay, so if you want to be the headlines before they are headlines, HVF method is your man, and our community is the only place where you can find it. Click that first link below and book a call. Otherwise, and start building wealth in reset times. By the way, how much you hold and own in wealth and physical assets that you can accumulate and pay for with that wealth are going to be the difference, are going successful in this reset. And there is an absolute polarizing event coming, and being one of the many that get smashed on the rocks of leverage, interest rate spikes, and all the other nasty little traps that are waiting out there. But plenty to live for, plenty to look forward to. Building wealth in this game is really exciting. So that's JP Morgan. What else did I want to show you? We had promised you the Palladium and the Platinum. So in a very similar way to those charts, let's just make sure I've shown you the gold silver ratio as well on the bigger time frame. That's the Palladium chart. So that is the Palladium chart. We had a lot of draws. It's super messy. All the targets but one are already made. All the targets but one are already made. Went into great detail. This is a monthly chart. So this is Palladium. Palladium came from a ridiculously low price at one point. You could have got it right down at $144 in 03. You could have got it for $156 in 08. And from 08 right the way up to there, it went to 3,400. So let's just be clear. For those that think only cryptos move and make big bucks, this you would have taken a bit of time holding this one, but 157 to 3,400. So that is 20 times to get to 3,000, and then you've still got another 400 for your 157. You're going to be another 22 times your money on listen, no one buys the bottom and no one sells the top. But if you didn't get a 10x out of that, you're making a mistake. If you're a long-term investor in this particular area on Palladium or in Palladium related stocks. What we did warn though is that this level of volatility that came subsequently is typical of things that are topping. And I want to just take the log scale off to show you how much that's absolutely come down. People don't see the volatility. You have to really make it pop for them. You have to really make it pop for them. Hello, 3-4, and then in a candle before you're at 1-4 or just above 1-5. That is super high volatility. And what tends to happen is it's topping. And we got a draw that we did, and we have called for downside on Palladium whilst being a precious metals bull generally. One member of a category is going down. We didn't flip bearish on all precious metals. Please don't misconstrue and misrepresent us. we are explaining which one was going to do badly. In fact, in the YouTube video that we provided, we said, and we showed it to you, we said you go short Palladium, long platinum. That was our chosen one. They're very, very close by category group, and that was your outcome that you got. And I think we covered it in a video, and I don't think that guy on Twitter was properly watching. But it's very tough, because people see a statement that somebody makes, like you some stupid flip-flopper, and in actual it's right to change your opinion anyway, but that you've changed your opinions on metals or something, and they're misconstruing you in terms of representation, and it's just not accurate. It's just not accurate of our position at all, and it's very difficult, because if you don't go and protect it, it becomes assumed, and you have to end up correcting misstatements of other people. We don't have that much concern about that, something like that on Twitter and various other aspects, but don't believe everything you see people say about how our positional views have been done. I see in the comments all the time, this and that, and then I was going like, I just haven't got the time to fix this. This has got, people will believe what they believe. These YouTubes are all here, you can watch them. So that's it. Down, more down. So this is all the loss of value of platinum at the top versus palladium, and the bottom call, this is a very long-term chart, was here during this period in this falling wedge break over there. So that it's still very early doors, is the point I make, for the relative relationship of these two metals. So if you go to weekly, you start to get a bit of a better picture and a degree to how much this is overperforming. Right in there, boom, up, 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 choppy a bit. Platinum was up and down too, generally up. So you've gone from around 0.4s, call it 0.425, to almost 9, which is doubling again in relative value. And the same with gold. We said if you wanted to, you could do gold. So you could go 100 grand, one short and the other one long. That means you've hedged out your dollar exposure, and you are just making money on platinum going up and making money on palladium going down. Platinum up, palladium down. And you got both. You got palladium going substantially down to sub 1000s, that's recently, and more. Okay, so that's the truth of that matter, just so that people don't get confused by a tweet. The one precious metal that's gone down. So let's go back here. What else did we want to show you on precious metals? Is there much else? There was also one thing I will show was the gold versus the SPY. So if we go gold market and we divide it by SPY, this shows equities generally, so it's less specific to the market. I want to show actually how low this is. It's at a localized low. Yes, it's not as low as it was. So we had ridiculous o'clock in 99, 2000 in terms of gold. Gold was $250. I mean, you should have taken every dollar you had and bought gold during that period, but it was absolutely loathed, and everything was hunky-dory, and everything was, go, go, go economy, Greenspan.com, the whole shooting match. Of course, it did top. This was a partial bull run. This bull run never played out like the 1980s bull. And then they went back to financialization of everything. You could see the grinding there. That was a break of the grind line. Look, you could have got out if you were a good technician, like we'd like to fancy we are on the 11.5s, so we don't get it right all the time. You could have got in over here on the break there of a double bottom. What was that multiple? 2.5, and you could have got out at 11.5. So that is a substantial multiple, and you would have been out over here. So 2013, you would have had the bias for that decade from roughly about 2 to 13 for that decade. It's actually 12 that you're getting out. It's before the end of 12, so it's there. A decade, you would have made a difference of, by owning gold, 5 times broadly what the stock market was giving during that period. and you would have sat out the 2009 collapse of the equity market. You would have had a small dip on your gold as well to go with that, and then seen it go even higher, right the way through to 13. However, since that, being in the equities has been the better option. Since 13 to 20, what was this? This is probably mid-20, in 21. Whoops, that moved a bit. Let's get a proper date for it. When was the low? Finally, the cursor showed up. Thank you. So 1st December 21. You also had March 20, which everybody knows about. How did they both do? Well, they both wet the bed. March 20. June, October, December, Jan, April, March. So actually, the equities wet the bed worse. So just take this on for a moment on board. You had a demand-destroying event that hit both gold and equities, and actually gold's relative valuation and relative performance in a major crisis that was the shutting down of the world, gold did better than shares. So it actually pushed really strongly up initially, and then all the printathon, then the stock market went up a little bit more than metals initially, and then we got to here. So you, for me, in my opinion, you are in a localized low point, having fallen very, very sharply at first and now starting to round out. You're at a quarter pipe, Skater Boys quarter pipe, and I would imagine that that continues very much like that, and it could even accelerate away. So you don't have to be taking ages rounding around. You can sometimes just go like that. So you don't get the other half of the quarter pipe, if you know what I mean. Doesn't always mean that. Right now, though, trading down because stock market up after being down for an extended period. Stock market is up. But what are we getting here? Let's have an analyze. This is monthly. Let's walk it through the big time frames right the way back down. That's weekly. That's daily. Currently, stock market up. But when the stock market gets into trouble, it will happen. So we're sitting here with this relative relationship, and we will see what happens next. When we leave 2000, I think at that point, we make progress on gold that will probably well supersede the equity market. As long as gold is playing in and around the 2000 mark and the equity market is advancing on a stats that said the economy is so awesome, labor is so good, manufacturing is so bullish, retail is better than expected, inflation is down, everything couldn't be better news. Bidenomics, man oh man, that is the economics of our time. Yep, he's a captured Zionist. He just admitted so while in Israel, proud to be a Zionist. You don't have to be of a certain religion to be a Zionist, he was saying. You sure are, bud. That's about the only thing honest you've said in ages. Anyway, so that's the gold assessment overall. What about stock market? How's it doing today? Well, it's up about 0.19%. There you go. Having a wee rally there after its pullback. It has taken about 70-80%, I would say even 85% of its pullback now, and that was a broadening structure. So let's be clear on one thing. I don't expect equities necessarily to fall apart in hyperstagflation. Remember, there's two parts to hyperstagflation. The stag, which is the stagnation, which is exceedingly low growth consumer wrecked. Yes, they want to wreck you. I'm afraid so. They do. And they've got a pretty good mechanism for doing it. And they've already tested it many times, in case you hadn't noticed. Anyway, maybe you haven't. Oh dear. Okay, there's that. But then there's also the inflation, which is the half that is inflation. And the loss of value of money means equities go up because the basis by which they're being measured in is actually losing immense amount of value. If you truly get that, then you'll know it's not simple a bear market for equities. Equities can go significantly higher. There'll be some that will, and particularly don't forget gold equities eventually, if they get running, they will get running like no tomorrows. They'll be cash cows, incredible cash cows, once their profitability comes back and is no longer so marginal. So the loss of value with the amount of debt that's being created is so vast that the printing to meet the interest payments and creation of new money to pay those interest payments, that will cause in of itself further compounding on compounding. Only now, instead of compounding at 0.5%, you're compounding at 5 and 6, will mean that there is a parabola of new money issuance required. On top of the fact that tax payments aren't what they were. And as a result of all of this, my good people and friends, your value of your money is getting so devalued that even failing and very average stocks will go up in diminished dollars. So it's not simple that it'll be a plain short. However, when you get the demand destroying event, which is that hit like COVID, everybody rushes to liquidity and you will get stock market downs. But the solutions will always be the same. And that needs more proliferation. Okay, so now you know. So you can see how this broadening structure here, which was a slide, it's a bit too big for a megaphone. You can see how you gap through that there. That's a clear break, and that's a bullish continuation on the S&P Index Cash Fund. It's a bullish continuation call. It is quite close to localized highs, so that's, you can get a little pullback and a rest and a little bit, but generally, you're going to grind up. Once you've had a reaction to this move that's taken you from there in the last 4 days to a high of over there, once you've had some degree of reaction, you're going to probably warble up a little higher until the grand piano falls out of the sky. And then after that, high again. Why? Because money is being destroyed. Debt and money, they go hand in hand. Money is borrowed into existence. Okay, thank you very much for watching. We really appreciate having on board. Don't forget, book a call, hit that top link below. And we are specializing in wealth building in reset times. And the old rules no longer apply. This is a transition. You are going to go through a transition, not to sitting down and weeing where you previously were standing up, or vice versa, depending on who you are. No, not that kind of transition. You're going to be forced through the pipe in the Shawshank Redemption. You remember that pipe that he crawled through to freedom? I'll not say the word, but you know what kind of pipe it is. It sure is smelly, and it's like hell itself. And you're going to go through that pipe, and that's out of no choice of your own. And how you come out the other side is going to be determined by the actions you take in these times. And we are specifically focused on that transition, wealth building and retention. It's not only what you make, it's what you keep in an environment where counterparty risk will never be higher in every single sense on many, many levels. There are so many crocodiles in the water, let us say, or snakes. I should maybe go with serpents and snakes. We're here to try help you guard this, and we will get some things wrong, but we are very focused on stress testing and being aware of those risks to the highest order and level, and eliminating them to the best degree that we can whilst building and retaining wealth. And if that makes sense to you, the first link in the description is good. If you just say, hey, I think I can do this all myself, hit the Pure Gold link. Very nice people, deliver anywhere. Very, very good to chat to. We'll give you the best prices. They buy back literally spot. So if you need to get out quickly, there's nothing worse than getting into something you can't get out. And people that sold you stuff saying it's so awesome. No, absolute guaranteed buybacks at spot. Boom. If you haven't tested it, you can buy a couple and ask for the money back. It'll work just like, just perfectly. Go ahead and do it. Great guys. And of course, Bullion Vault below in the links description. You can continue to accumulate in internet gold until you get up to a logical amount, sell it off, and then buy it. So that way you still get the upside of the movement in the metal, and then you can change it for the metal later once you've got a logical amount. Okay guys, thank you for watching that. So pretty bullish, medium term S&P call, but the main business is Palladium could be getting close to its low. So let's just talk about this. If Palladium gets to its final target or is largely done, could the bottoming of Palladium being so cheap relative to well, a lot cheaper than it was before, to its mining point, be the beginning of the bull market for all precious metals? Because actually throughout this period we've had a bit of a mixed group. We've had the bearishness that we've asserted on Palladium. Now you get to an absolute bottom on Palladium, and it's like there's no easy ways in now. They've all got to go up. They've all got to go up. You could, you eventually, all those that were correcting are done correcting. You now have a suite of very, very rare palladium and platinum, super rare, bought in BRICS nations such as South Africa and Russia, by the way, not so much elsewhere in the Western world, bit in Canada, bit in Australia, maybe here and there, but not greatly. So you need that trade, and if we're bifurcating the supply chain, well, good luck for that. That might be why they're getting out of the platinum metals for the while, but hey, if you're using that for jewelry, then you need white gold in replacement. Then you need other things to utilize. So in the end, you're going to have to buy precious metals for their industrial use if that's what they are serving as a purpose. And when it comes to jewelry, you're going to have some form of either gold, platinum in that use. And when it comes to bullion and just holding it and people being afraid of the true value of money nowadays in an environment where you're having proliferation of fiat, which would you rather hold, $1,000 for 10 years or $1,000 of gold for 10 years? I'm in the gold camp, I'm in the silver camp, I'm in the platinum camp, long before I'm in the cash camp. That doesn't mean you shouldn't have some cash for short and medium term needs. We talk about that in greater detail in our webinars and our updates in the community. Book that call in the first link below. Until next time, I'll catch you later. Thank you for watching, sharing and likes, because we speak about the truth and that gets us into trouble. We've already had a strike or two on this channel. Sharing is a massive help to help us keep growing the channel. We appreciate that. If you can do the like and the share and nothing else, I properly appreciate it, and I give you a major thank you. Namaste. Catch you later. Bye.